Welcome, guys, to Professor's Opinion. And on this video, I want to talk about why trading jobs, finances jobs are on the rise across the world, while engineering, science jobs are on the decline. And I want to, I guess, I wouldn't say the jobs are on the decline as much as the demand and supply. So I want to start by talking about first the demand and supply of what's going on. And then we can get a good understanding why trading finance jobs are so popular these days, while there seems to be not enough engineering or science related technical jobs out there. So the first thing you guys have to understand is if you want to look through history, let's first talk about trading jobs, okay, finance jobs. Until 1971, you had a period, especially after World War II, until 1971, you had the US dollar backed by gold standard. And what that created was some sort of discipline in the financial industry because you can't just print as much money as you want and just mess with the interest rate whenever you want. And that created a level of discipline which kept volatility in the stock markets and other financial market at a very low level. Okay. And because of that low volatility and not enough liquidity, because you can't just print money when you want. This is until 1971. I'm talking about when US was still backed by the gold standard. And so in that environment with low volatility, not enough liquidity going around, you're not going to make a lot of money by trading. Okay. Trading is only good to make money if you can take advantage of volatility in the system, shocks in the system. And that's what the difference between trading and investment is. Investment is just looking at a long-term picture, good company, good balance sheet, good objectives, good idea. Trading is more about taking advantage of the short-term shocks in the system, short-term volatility. So until 1971, trading was very, I would say, not very popular, I guess. But then US went off the gold standard. You can now print as much money as you want. And so slowly, the Wall Street came in. The Wall Street became more and more popular. More liquidity came in to the markets as a result of getting off the gold standard, and trading started becoming more popular. And since then, now today, especially since the crash of 2010 and then the crash of 2020, what's going on today is that the global debt level is at an all-time high. Okay, all countries are burdened with debt. One of the big balance sheet markers or line items for most countries around the world is interest payment, not even debt repayment, just the interest that has to be paid on the debt that has been already borrowed. That is now one of the biggest line item in most countries' government budget, including USA. So now you have moved into a society that's dominated and controlled by interest, by the banks, by banking. And so this is, and you have to understand what credit or debt is. Especially when it's not backed by any gold standard, money is debt when it's not backed by any gold standard. I think that's pretty obvious from my previous videos. And so given that the global debt level, government, private, corporation, whatever, the global debt level is at an all-time high. So that means the global money circulation is at an all-time high. So liquidity is at an all-time high. I mean, yeah, now it has come down a bit since COVID because of high interest rate, but still it's at an all-time high. So there's money going around everywhere. And in that environment, you're going to have a lot of volatility in the system, right? If the river bed, if there's a river flowing and there's not enough water in the river, there's not going to be enough streams or waves. Okay, when the river is overflowing with a lot of water, That's when you're going to get a lot of waves, a lot of volatility. And that's basically what's going on in the financial markets around the world. You have too much liquidity, too much debt, too much money, too much volatility, and too much shocks in the system short term, creating too many trading opportunities that hedge funds, big asset managers, big banks, big trading firms don't want to miss out on. So they're now hiring more and more traders. And that's basically where we're at. And that's one of the reasons why trading jobs and the trading finance sector is now becoming in demand, more popular. And the reason why people want to do that kind of job, I mean, a lot of people will say Wolf of Wall Street. There was the video movie, and uh, sure, that could be some people's motivation, but I think people have realized that there's not much money to be made in any other sector through any meaningful. I mean, if you're a CEO or any executive or something like that, that's a different thing. But other than that, even a managerial position or a normal position in any company doesn't pay anywhere near the money that you can make as a trader, as a professional trader. And I think that's why these jobs are also in demand. And so that's why I think trading, finance, whatever you want to call it, this is on the rise around the world. And now, if you want to come to engineering, science related jobs, and this is very interesting because the decline in engineering and science jobs around the world has coincided with the rise of China's technological supremacy. And the reasoning is twofold because on one hand, you have the Western society is becoming more financialized, more focused on money and less focused on education and innovation. And so you have capital flow going into the finance sector and out of the science and engineering sectors. And China is doing basically the opposite. They're taking money they've made through exports and investing it into innovation and science and engineering. So engineering and science jobs are they're very popular in China for a reason because the government incentivizes people to work in this sector and the government pays them good salaries and good benefits and offers them a good stable job. That's not the case in Western countries. And I know that because I worked as an engineer and as a trader. In Western countries, the supply of engineers is endless. And I know it's common, like most Asians who immigrate to Western countries, they're either doctors or engineers. And it's actually kind of true because, and there are more engineers than doctors of Asian background, I would say, in Western countries. And so it's a supply and demand issue. There's not enough private sector or even government funded demand of engineers and scientists in the Western societies, in my opinion, compared to China anymore, at least. And the supply is endless. The supply of engineers and scientists in Western societies is endless. Most of the immigrants coming from the Eastern world are from technical science backgrounds. So that's basically what's driving this decline of the engineering science sector. It's a supply and demand issue, to put it simply. And yeah, I myself have also shifted from engineering into the trading sector because I think that's where the future is going. I'm not saying the engineering sector or the science sector will die out in the Western world or in the globe as a whole, but we're moving into a world that's more focused on how to handle this ever increasing massive global debt and less focused on building stuff, to put it simply. So yeah, but that's it for this one. I'll come back with another video pretty soon. And I have some interest. I mean, I'm thinking about making some French learning videos. I want to get back to that. Maybe some math probability videos as well that might help you guys who are interested in applying probabilistic models in trading. So those learning will help you. So I'll get back to those videos very soon. But yeah, until then, peace.